This is the most consistent entry model that you can use, and it's actually a lot simpler than you would think. This entry model has a 3-step criteria and is more commonly referred to the silver bullet strategy. You identify the market's trend, in this case we are bullish. You are then waiting for a liquidity raid followed by a shift in market structure. If you are bullish, you're going to want to see a liquidity raid on the sell side because that will create a high resistance liquidity run. You will then wait for a shift in market structure, being candle closure above the previous high, and ideally during that leg up we would create an imbalance in the form of a bullish fair value gap. The point in price where you will be entering is going to be either on this imbalance or the order block that we create. Me personally, I find that order blocks are more consistent, but in a perfect situation you would ideally have both. For example, we have that sell side liquidity raid followed by a shift in market structure closing above these previous highs. We have that bullish fair value gap being held with the bodies and the wicks trading down into this order block. Entry point at the order block all the way to the top that we created was a $45 move on the S&P 500. We have that sell side liquidity raid followed by a shift in market structure. We have this fair value gap, but more importantly we have this order block. We trade into that order block and we have a bullish expansion. Entry at the order block to the top we created would have been 83 pips on Euro USD. Now obviously this is not a guaranteed win, but the reason this is so strong is because you are using protected highs and lows and following structure. So hopefully that explains to you why